Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, July the 19th. The year's 2022. Let's talk trading. Setting your limits, part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, yesterday I talked to the boys and girls and non-binary traders about setting limits. Want to get your take on it.
Okay. Yeah. I think there's a lot of ways to go and look at it. The first way and the obvious way is you got to take your butt, put it in the seat, and open up Excel or whatever spreadsheet you like to go and use, and start figuring out based on just figuring out how much money do you have in the account, how much are you willing to risk, how much you're willing to lose, and start doing some of those calculations. Start doing it, and here's the main reason for doing that. One, because it's an obvious thing. You don't go into business without knowing the risk. So trading's a business. So why aren't you going and figuring out what your risks are? And part of it, and it's a two-sided equation there, because part of it is, if depending on if you're trying to do this as a hobby, or you're trying to do this to make a living, or you're just trying to do this just to add a little extra, maybe what they call nowadays a side hustle, what's your purpose for all that? Start trying to figure out both what you're willing to risk, how much you're willing, and what are your realistic goals of trying to make, and figure out those limits that way. That way, by doing that, you're able to go and figure out, how much you're willing to go and, put on in terms of a trade. Because, without that, that's the starting point. You need to be able to know, hey, every trade I take, I'm going to take, one lot, two lot, three lot, whatever it may be, one mini lot, one micro lot, depending on where your account is in the beginning of this. And, are you going to, now for me, because I like to keep things simple, I just always trade the exact same amount, and no matter what, I always trade the same amount. It's just easier. I know where I'm at. It's very easy to go and, figure out exactly what I'm doing while I'm in a trade. Whereas the other possibility, the other way you could do it is you can say, you know what, I'm always going to go and trade, so that I'm always willing to risk up to 2% of my account, or, 1% of your account, whatever that number may be. And again, I can't tell you what that number is. That's a personal thing. Everybody's got to go and figure it out, and, in the beginning, I think most traders, because the account size is not very big, they need to go and trade probably a little bit heavier than they ought, because they need to go and grow their account size. And, I'm raising my hand right now because I had to do that, and I think most people did. The question is, do you go and trade so heavy that you take the potential of just one trade going against you, and the next thing or maybe two or three trades going against you in a row, and next thing you know, you've depleted your account. So you got to be careful about that. Now, one of the things that here's a question I like to go and ask people: what is the likelihood that you're going to go and lose 8 trades in a row? Hopefully it's pretty low. Can it happen? Yes, it absolutely can happen. And based on that idea of knowing that, well, let's say I'm willing to go and lose, I'll just pick a round number. You're willing to go and lose $1,000 in a day. Well, let's go and move that instead of just putting it a little bit more conservative. Let's say we're willing to go and look at maybe losing 10 in a row. Well, what would that mean? Taking $1,000 and dividing it by 10. So that means that you're willing to lose up to $100 per trade. Okay. Now you start looking at the trade and looking at your method, and you need to go and figure out what your method is. If you're like me and you're scalping, I'm willing to go on a scalp type of trade. That means I'm willing to lose 2-3 pips. Well, if I'm willing to lose $100, well, I can go and calculate what my stop loss needs to be, because or I can go the other. My stop loss is going to be 2 or 3 pips, so I can now figure out exactly what I'm willing to go and put my lot size on for. It's just a simple calculation. And you need to sit down with, like I said in the very beginning of this, you need to sit down with a spreadsheet, or if you're old school and you got a piece of paper and a calculator, that works just as well. In some ways that's even better, because what that does is it forces you to think through everything, and not, I'm one of these guys that if I'm writing it down on a piece of paper, maybe I'm just old, but it's when I go and write it down physically on a piece of paper, it gets embedded in my brain, to the point of which, what happens is that when I'm looking at a chart, I know exactly what's going on. I don't have to look at anything, because it's just innately part of me. They say in education, you do everything in threes, and the idea is that you say it, you read it, and you write it, and I think that's very important for trading as well, because, you need to set your limits, like TRO was saying, in the video yesterday. Well, the thing is, not just do you have to set the limits, but you got to keep your limits, and maybe that's a different topic we can talk about, later on, TRO. Just the idea of, okay, you set your limits, now let's keep your limits.
As in not moving the stop loss.
Yeah, as in not moving a stop loss, or for that matter, depending on your method, maybe not moving a TP as well. I mean, it can go both ways. I mean, I've been in trades where, hey, I was looking to make 3 pips or 4 pips on this trade, and hey, I got my 3-4 pips right away. I'm taking my TP and I'm pulling it up, and I'm not going to get out. And the next thing I know, the thing turns around and I take a loss. That happens too. So it depends on your method. Again, it's a very, very personal thing. And then the last part of it, for me anyway, in terms of setting your limits, is okay. You guys know that I can't get through one of these video things without going and talking about psychology and emotion, because it's so important. Just because you know what you can do on paper, or you need to do on paper, doesn't mean that's what you should do. When you actually trade. So if you know that, based on your account size, you should be taking, 5-lot trades, and that's your limit. You take a 5-lot trade, and you have a stop loss that you're willing to go and lose $2,000. Just I'm picking numbers, out of the air here, and that's what paper says. Okay, but it turns out that when you start losing, you're up to $500, $600, $700 in paper loss. You start making really bad judgment calls. You start jumping into airball call trades just to try to average in. You start doing really silly and ridiculous things. Well, maybe that means that you're just not ready to go and trade at that level yet. There's nothing wrong with that. You got to start where you're at, and what you do is you cut back, and you need to figure out where you're able to trade and trade comfortably. And once you're trading comfortably, and you're gotten used to it, well, that's when you can go and say, you know what, I'm doing pretty well here. There's nothing wrong with doing well here, but let's go. I've got my count size says I can do this. Let's just go and move it up a little bit. And notice I said a little bit. I didn't say, okay, go from trading 1 lot up to trading 5 lots, and said a little bit. Maybe you go up to, trading from, 1 lot to 1.2 lots. 1.3 lots, something like that, and incrementally, bring yourself up, and that's how you got to look at this. This is a long game, okay? It's not something you do overnight. It's a long game, and you need to get yourself to that position and bring yourself to that point.
Yeah, that's one thing you talked about, the long game. If we want to do a baseball analogy, each trade is like an at bat, and you get so many outs.
Yeah, exactly.
And there's per inning, and there's so many innings in a game. The thing about trading is, there is no limit to the innings unless you blow your account.
Right.
The game goes on until you no longer trade.
Yeah, it's like when you play adult softball where they have mercy rules. Sort of like, okay, you're losing to the other team by 20 runs, and they mercy you out. but you're right in trading. And that's the good thing about trading too, is that you can go and figure out those limits, and depending on how you're doing your calculations, you can set it up that you can play forever. It just, that means that you need to go and be constantly looking at, at your account size. So even if you're losing a trade after trade after trade, if you've gone and set up your limits correctly, today I may be willing to lose $100. Well, tomorrow, because I had a really poor day today, I may only be willing to lose $90 or $70. And as you get better at trading, hopefully what happens is that, let's say you get all the way down to 30. All of a sudden now, hey, I'm at 30. I'm at 30, I'm at 30, I'm at 30, I'm at 35, I'm at 40, I'm at 45, I'm at 50, and you start building yourself back up. That's the nice thing about trading, because you can do that. You have the flexibility to do that, because there is no broker there. I'm not doing it. TRO's not doing it. Nobody out there is doing it, telling you how much to risk on any particular trade. There's only one person who makes that determination, and that's you, the trader, the one that's sitting in front of the desk or holding the phone in your hand, however you're making your trades.
I'm looking at the pound dollar right now, and I switched over to the M30 chart because I noticed that on the H1 chart, it looked like it had ranged. It was hitting that average range for the last, let me switch back. It's at 23 pips. Last hour was 21. Before that was 32 and 27. So to me, that was indicating, maybe it'll come back the other way. Plus, it bounced off the double O at 120.
Yeah, you're exactly right. It did that. And if you recall, right before we got on this call, Tiro, I had said that the last time it got down here, it just literally bounced off, and that was about 3-4 hours ago. And did the exact same thing again. That's not to say they could have blasted through it, but it's the type of thing where you're saying, we've ranged out, we're coming to a level that we know it's had problems with before. There's a good chance that it's going to go and do the same thing. And so that's not a reason to take a trade. So nobody think, please, nobody think that that's a reason to take the trade. What that is saying to you, okay, if I get a trade signal, and if you're doing, high-low boxes, you would have gotten a trade somewhere around, let me just measure it here on my chart. On my chart, you would have gotten a trade at, 2.8, something like that.
Yeah.
3.0.
Yeah, 2.1 on my chart. Yeah.
And so you would have taken a trade there, and, you would have been up, you potentially could have been up 7, 8 pips, depending on where you physically actually did press the button or the broker put you in, and you could still be in that trade, so you could have made a bunch of money on it. But the thing is that would have really given you a little bit of more confidence was the fact that the last time it came down here, it wasn't able to get through it. And it did almost exactly the same thing as it did this time, where it went and hit it, bounced off. If you look at a 1-minute chart, hit it, bounced off, hit it, bounced off, hit it again, and then finally took off. And that's what it did 3-4 hours ago as well. So, that's, history doesn't mean anything other than, the reality is that history does tend to repeat itself.
Yes, it does. And
so
history's gonna repeat itself, because the fastest 15 minutes in trading is gonna be up in about a minute.
Yeah, and just to close out, I'm gonna repeat myself here, but that's okay. The psychology of this is so stinking important. I can't emphasize it any more than I am right now. It is just incredibly important. And if you just poo-poo that, I'm telling you, you're going to have some trouble. You're going to have some trouble, because you're not going to you're going to go and make some irrational decisions, and you're going to be sorry for it. So please, please, please don't go and just dismiss it. That's just that psychobabble stuff. No, there's an element to it. You are a living creature, and as a living creature, we do react. We're built in such a way that there's fear, as we talked about last week, and there's emotion, excitement. There's all these different feelings.
And
That
that's
really can
why,
roll in.
yeah, it's not, that's why it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.